Good morning, dear student. I'm Kunal Kiran from the Millennium School, Lucknow. Dear student, we have learned about journal. Journal is all about identifying the business transaction, measuring them in terms of money, and after that, recording in the books of account. We have learned about how to journalize business transaction on the basis of two rules: conventional rule of debit and credit and modern rule of debit and credit. Now the purpose, just recap to remind you, the purpose of accounting is to record the business transaction. This is the first purpose, and why we are recording is to know the net profit or net loss during the year, as well as to know the financial position of the business. So journal is a recording of business transaction day by day in the books of account. So at the end of the year, that is after 365 days, in journal we would have more than 500 journal entries or more. So, and different accounts are recorded in different places. On the basis of journal, we could not find out the net profit or net loss, because at the end of the year we don't know the balance of each account. Suppose I have paid salary to my employee every month, every first week of the month. So 12 times I would have paid salary. But how much salary I have paid during the year, journal will not tell you. It would have record 12 times on different dates, but just going through journal you won't be able to tell that how much salary you have paid. The same way, if goods are purchased during the year, it would have been purchased during the year different on different dates or on different months. But at the end of the year, if you want to know how much stock you have purchased during the year or how much purchases you have made during the year, it's just not possible from the journal, because journal is only recording the transaction in the books of account. So to know the net profit or net loss, we must know the balances of each account at the end of the year. Means I should know what is the total purchase we have made during the year, what is the total amount of sales we have made during the year, what is the amount of salary we have paid during the year, and so on. For that, the another step in accounting is to classifying the recorded data. So ledger is a classification process. In this classification, same type of transaction grouped under one account. Like throughout the year, we have purchased many times, and it is recorded in many places. So we open a account in ledger, that is purchase account. All the journal entries related to purchase will be recorded, will be posted to the ledger. And in this way, by making purchase account, we got to know that what is the total purchase or what is the balance of purchase at the end of the year. The same process with all the accounts which are involved during the year. So ledger is a classification process in which same type of transaction put under one account, that is ledger. So when in this chapter of ledger, we are going to know how to record in the ledger, and from journal whatever we have recorded and putting it into the ledger, the process is known as posting. From journal entry to recording in the ledger is called posting. So in this chapter we are going to learn how to post, what is the process of posting, and how we make a ledger, what is its format, how we can make balance, calculate balances of each, that is called balancing of ledger account. So first of all, meaning of journal. Transactions are recorded in the journal and thereafter they are posted to the relevant account in the ledger. All the accounts put together make a ledger. In other words, ledger is a book in which various accounts such as assets account, liabilities account, capital account, revenue account, and expenses account are opened and transactions are posted from the ledger. So features of ledger, and the account ledger is also known as principal book. It's very important book because on the basis of this book we prepare trial balance, we prepare financial statement, which ultimately gives us about knowledge about the net profit or net loss or financial position of the business. So ledger is a principal book, whereas journal we have studied is known as original book of entry. Ledger is also known as book of final entry because when the transaction enter in the books of account and finally what is its balance or finally what happened to that account is decided by ledger. So ledger is also known as book of final entry, and at the same time it is also known as principal book. Now next is features of ledger. So first feature is ledger is a master record of all the accounts of the business. Why it is called master book of master record of all the accounts of the business? Because this is ledger tells you about the balances of each account during at the end of the accounting year, and the same time you can check to any account to know what transactions related to that particular account take place during the year at one place. So ledger is a master record of all the accounts of the business. It tells you about each and every account balances if you go through, and each and every transactions take place on a particular account. Another feature is it is prepared from journal. It is very much clear. It is prepared on the basis of journal. Whatever the journal entry we have made, on the basis of that entry we post them into the ledger. So it's very clear to you. Third one is ledger accounts show the current balances in all accounts. That is, I have already told you. Next is trial balance and final accounts are prepared from the ledger account. Yes, we prepare ledger on the basis of journal. After preparing a ledger, we get to know ledger gives me outcome as a balances of each account. The on the basis of these balances of account, we prepare a trial balance, and on the basis of trial balance, we prepare our final accounts or financial statement. Now next is ledger accounts summarize the effect of transaction upon assets, liabilities, capital, income and expenditure. Definitely, we have recorded about the assets in the journal many times a year, many times in within the year, throughout the year. When we post them into the ledger, then we get to know about that assets, how it was moved during the year. So ledger tells you the summary of happening with that asset or happening with that liability or expenses, capital or revenues. Utility of ledger. First utility, it provides complete information of particular account. Means if you, for journal, if you are going through the journal and if you want to know the information of the purchase, you have to flip out so many pages, and at the end, after flipping out all the pages during the year, it may be 365 or more than pages, then you got to know about the purchases, and you have to make lot of effort to know the total purchase. But ledger give you a gist, a summarized form, and very quickly you get to know about all the information, complete information about the particular account. So the first utility of ledger is it provides complete information of particular account. Second, information of income and expenses. Ledger tells you about the balances of each expenses and income. Third, it helps in preparation of trial balance that I have clarified you. And the last one, it helpful in preparing the financial statement or final accounts. So these are the four utilities. First, provide complete information of particular account, information of income and expenses, preparation of trial balance, and helpful in preparing final account. Now, now we are going to learn about the format of the ledger. This is the format of ledger. It has two sides. One side is, left side is known as debit side, and right hand side is known as credit side. This is written credit. So this is a T shape. At the mid you will write the name of the account, say wages. Suppose wages account, you will write at the mid of this format. Both the side same columns are there. So on debit side, date column, particular column, journal folio, amount. On credit side, date column, particular column, journal folio, and amount. So date column, on date column you will mention the date of the transaction. Particular column you will write the name of the other account. Suppose wages account was debited, so when you enter, you will enter on the debit amount, you will enter on the debit side, but the name you mentioned here is just opposite account which is credited, name of the account which is credited against wages account, that will be written here, name of the account, other account, right? And with the prefix to, we will see journal folio is a page number from where you are posting from. It's a page number in the journal from where you are posting this entry. And the same way, and the amount, the account which is debited with the amount, that amount will be enter here, right? So this is the format. The same way on the credit side, you will write the date of the transaction, then you will enter the name of account which is debited against that account. Suppose wages account is credited, so you will enter wages account is credited in the journal, so you will put the amount with the amount of wages credited. And the same time, when you post it into the ledger, you will write on the credit side, in particular column we will put prefix by and write the name of account which is debited against the wages account. So that's why it is like written name of the other account. This is you can say that when name of account is written in the mid of this format, and it will not enter anywhere inside the account. all the information related to enter here, but the name of account, wages account, you will not enter anywhere inside this format. How will it be? We will see tomorrow. Thank you and have a nice day.